As of 2001, the World Bank and the International Monetary Fund have authorized large financial packages for low-income countries, including $650 billion in special drawing rights to promote economic recovery and $100 billion in finance for health systems. The World Bank and IMF recognize that global recovery necessitates joint action and collaboration in order to increase inequities and support long-term growth. They expect that enhanced collaboration and resources will assist countries in building better and creating a more equitable and sustainable world.
Global growth in 2022 dropped by almost half, from 6.1 to 3.4%. And this slowdown continues this year. Despite surprisingly resilient labor markets and strong consumer demand, despite the uplift in China, we expect the world economy to grow less than 3% this year.
The organizations also advocate for increased debt relief and financing to assist low-income nations in recovering from the pandemic. They aim at promoting a more prosperous and sustainable future for all through fostering global growth and minimizing disparities.
Now, so there's been a forceful response by policymakers. Clearly, that helps stem some of the systemic risk and anxiety. But the system, as you said, is still very fragile. We're coming out of 10 plus 15 years of very low interest rate, very low volatility, very ample liquidity. Then we move into a new regime, if you want. High inflation, more persistent than perhaps we policymakers had hoped for. And so not just the extent of increase in interest rate, but the pace at which interest rate have been increased. Those are the strains that we see in markets and financial institutions.
Governments and corporations have also been urged to focus expenditures in healthcare, education, and infrastructure in order to promote equitable and sustainable growth. They are also recommended to engage in digital transformation and green technology, since they are the present gold mines for employment and innovation potential.
Of how difficult it is to transition from a period of low interest rate and ample liquidity to a period of high interest rate and scarce liquidity. What this shakeup has shown is that there are risk management failures in some banks, there are some supervisory lapses, but they also have shown something positive, that the banking sector has come a long way since the 2008 global financial crisis. Today, banks are generally stronger and more resilient, and policymakers have been remarkably swift and coordinated in their response in recent weeks.
Despite the challenges, the World Bank and IMF remain optimistic about the future. However, they have re-echoed on the need of solidarity to reduce disparities and foster inclusive economic growth in the current economic times.